Hello everyone, this is Jennifer. In this video, we're going to continue with the accounts of groups, problems and solutions. So from the following balance sheet of X Limited and its subsidiary Y Limited. So the parent company is X Limited, the subsidiary company is Y Limited. Prepare the consolidated balance sheet as on 31/3/2015. So we have share capital, shares, general reserve, profit and loss account, sundry creditors, bills payable. On the asset side, we have goodwill, buildings, machinery, shares in Y Limited, inventories, debtors, bills receivable, cash and cash equivalent. So the X Limited purchased 7,500 shares of Y Limited on 1/10/2014. So the date of purchase is 1/10/2014. So whatever happens before that will be considered as capital profits. Whatever happens that the profits and reserves after that will be considered as revenue profits. So the balance to general reserve and profit and loss account of Y Limited stood at 6,000 and 4,000 respectively on 1/4/2014. So the BR of Y Limited 9,000 is accepted by X Limited. The debtors of Y Limited 2,000 due from X Limited. These are nothing but intercompany owings. So calculation of ratio. So our step 1 is calculation of ratio. So number of shares of Y Limited. So how many shares of Y Limited is there? So the shares of Y Limited 50,000 divided by 5. So 50,000 divided by 5. So 10,000 shares are there. What is this 5? 5 rupees is the per value of shares. So the number of shares held by X Limited as per the question that they have given is X Limited purchased 7,500 shares. So out of 10,000 shares, 7,500 was purchased by X Limited. So the number of shares held by minority shareholders is 2,500. Okay, so 7,500 is to 2,500. You get 75 is to 25, which is 3 is to 1. Okay, step number 2, calculation of capital profits. So what is your date of purchase? Your date of purchase is 1/10/2014. So what the general reserve and the profit and loss account before 1/10/2014 is considered to be your capital profits. So general reserve as on 1/4/2014 is 6,000, which they have given in your additional information, and the profit and loss account is 4,000, which is on 1/4/2014. So the balance sheet was termed to be till 31/3/2015. So this is after your purchases. So it will become your revenue profits, which is there in your balance sheet, and what is given in your additional information will become your capital profit. So general reserve on 1/4/2014 is 6,000, which is given in additional information. Profit and loss account on 1/4/2014 is 4,000. And if you see, the balance sheet is from 1/4/2014 to 31/3/2015. Okay, so 1/4/2014 till 1/10/2014, that we will consider. So April, May, June, July, August, September, October till October till 1st of October 2014, it will be considered to be your capital profit. So 6 months of the profit and 6 months of the general reserve is considered to be your capital profit. So general reserve for 6 months, how much is your amount? 10,000. 10,000 in minus 6,000, which is your general reserve that we have taken, okay, into 6 by 12, which is equal to 2,000. In the same way, for profit and loss account, for 6 months, which is 16,000 from the balance sheet, minus your 4,000, the profit and loss account on 1/4/2014. That we will minus it into 6 by 12, which is 6,000. So your capital profit is 18,000 if you total it up. So the share of X Limited is 18,000 into 3 by 4, which is 13,500. Share of minority shareholders is 18,000 into 1 by 4, which is 4,500. So calculation of revenue profits. So the general reserve for 6 months. Okay. The half 6 months we have put it for capital reserve. The rest 6 months will consider to be our revenue profits. So the same way, general reserve for 6 months, 4,000 into 6 by 12, which is 2,000, the same amount. Profit and loss for 6 months, 12,000 into 6 by 12, 6,000. Okay, the share of X Limited is, what is your total of your revenue profits? 8,000 into 3 by 4, which is 6,000. Share of minority shareholders is 8,000 into 1 by 4, which is 2,000. Calculation of non-controlling interest. So our next part is we're supposed to calculate how much of minority shareholders their share of revenue profits and their share of capital profit. So the face value of shares held by minority shareholders is 2,500 shares they hold into 5 rupees per share. So 12,500. So from working note number 2, we get share of capital profit, which is 4,500. Working note number 3, we get share of revenue profits, which is 2,000. So the total non-controlling interest is 19,000. So calculation of goodwill or capital reserves. So the cost of goods, cost of shares held by X Limited. So if you see in the question, cost of shares held by X Limited. So if you see in the asset side of the balance sheet in the question, shares in Y Limited, 42,500. So the cost of shares held by X Limited is 42,500 less what is the face value of 7,000 shares which is bought by X Limited. 7,500 into 5. So 13,000 7,500 is the face value of shares, but we have bought it for 42,500. Share of capital profit, so 13,500. So if you total it up, you get a negative figure, so you consider it to be your capital reserve. So consolidated balance sheet as on 31 March 2015. So we can start with shareholders fund. Under that we have share capital, shares of rupees 5 each, so 2,50,000. Then we move on to reserves and surplus. We have capital reserve 8,500 minus your goodwill, which is 5,000. So 5,000 of your Y Limited, so you get 33,500. So profit and loss account, X Limited is 12,500, Y Limited is 6,000, total is 18,500. Non-controlling interest, from the working note we get 19,000. Moving on to your non-current liabilities, we do not have anything. Moving on to our current liabilities. Under that, in the question we have accounts payable. So we have 15,000 plus 3,000. First we have creditors, which is 22,500 and 6,000. So 22,500 of X Limited, 6,000 of Y Limited. If you see in the question, we have intercompany owings. So the debtors, they are telling 2,000 is due. So in from the creditors and from the debtors, you will minus this 2,000. So intercompany owings 2,000 will be minus. So you get 26,500. Next, bills payable. X Limited we have 15,000, Y Limited we have 3,000. Total is 8,000. Less your intercompany owings 9,000. So you get 9,000. So the total of your liability side is we have. Now moving on to your asset side, non-current asset. Under that we have fixed assets. Under fixed assets is your tangible asset. So we start with buildings. X limited is 50,000, Y limited is 17,500, total is 67,500. Machinery, X limited is 1,50,000, Y limited 30,000, 1,80,000. All this you will take it from the balance sheet of the question. So current asset inventories is X limited 50,000, Y limited is 15,000, so it is 65,000. Accounts receivable, debtors, X limited 30,000, Y limited 6,000, total is 36,000, less your intercompany owings 2,000, which we minused from our creditors also 34,000. And bills receivable, X limited is 9,000, Y limited is 9, X limited is nil, Y limited is 9,000, total is 9,000, minus the intercompany owing 9,000. So outer column is nil. Cash and cash equivalent, X limited and Y limited is 2,500 respectively. The total is 5,000. So your total gets balanced within assets and liabilities side. So moving on to our next problem. So on 31/3/2015, the balance sheet of H Limited and its subsidiary S Limited stood as follows. We have the equity capital. The holding company is H. The subsidiary company is S. Equity share capital, general reserve, profit and loss account. Sundry creditors, assets, we have fixed assets. 75% shares in S Limited at cost. Inventories, other current asset. So draw consolidated balance sheet as at 31/3/2015 after taking into consideration the following information. H Limited acquired shares on 31/7/2014. So they have acquired shares on 31/7/2014. So before that, whatever happens is your capital profits. After that, whatever happens is your revenue profits. So S Limited earned a profit of 45,000 for the year ended 31/3/2015. On 1/1/2015, S Limited sold to H Limited goods costing 15,000 for 20,000. On 31/3/2014, half of the above goods were lying unsold in the godowns of H Limited. So we'll start. So calculation of ratio. So share capital of S Limited is, how much of share capital do they have? It is 2 lakhs. So share capital held by H Limited is 1,50,000 and the share capital held by minority shareholders is 50,000. So 1,50,000 is to 50,000, so 3:1. Because they have not given the face value of shares, so we do not know the number of shares. Calculation of capital profits. So the general reserve, okay, in the balance sheet they have given general reserve is 70,000 and the profit and loss account is 55,000 of S Limited. So general reserve as on 1/4/2014 is 70,000. Profit and loss account as on 1/4/2014 is 10,000. And profits and loss account for the year, whole year, they have given it as 45,000, which is till 31/3/2015. But when did they acquire? 31/7/2014. So right from 31/4/2014 to 31/3/2015, they have a profit of 45,000. In that 3 months is considered to be a capital profits, that is till your date of acquisition. After that, it is considered to be your revenue profits. So for 3 months we need to for 4 months we need to calculate, which is April, May, June and July, because till July we consider to be a capital profits, because on July is your acquiring of shares done. So 45,000 into 4 by 12, which is 15,000. So your capital profits total is 95,000. The share of H Limited is 95,000 into 3 by 4, which is 71,250. and share of minority shareholders 95,000 into 1 by 4, which is 23,750. Calculation of revenue profits. So your general reserve is 70,000 minus 70,000. Okay, so there is no general reserve for the revenue profits. Profit and loss account is for 8 months, and this 45,000, which is for the whole year. 4,000 we consider for capital, 4 months we consider for the capital, and 8 months we consider for the revenue. So 8 by 12, which is 30,000. So revenue profits is 30,000. Share of H Limited is 30,000 into 3 by 4, which is 22,500. Share of minority shareholders is 30,000 to 1 by 4, which is 7,500. So calculation of non-controlling interest, face value of 25% shares, which is 50,000. Add your share of capital profits, add your share of revenue profits, which is 23,750 and 7,500. The total you get 81,250. Moving on to your calculation of capital or goodwill reserve, cost of 75% of shares held by H Limited, which is 2,82,000. So which they have given in the question, 75% shares in S Limited, and less face value of 75% shares, 2 lakh into 75 by 100, 1,50,000. Share of capital profits of H Limited 71,250. Total you get 2,21,250. So 2,80,000 minus 2,21,250 is nothing but 58,750. It's a positive figure, so you consider it to be your goodwill. So if you see there's a adjustment telling about the sales and there's a profit. So on 1/1/2015, H Limited sold to H Limited goods costing 15,000 for 20,000. So what is your profit? 20,000 minus 15, 5,000 is your profit. So on 31/3/2014, half of the above goods were lying unsold in the godowns of H Limited. So therefore unrealized profit is 5,000 into 1 by 2, which is 2,500. So your consolidated balance sheet as on 31/3/2015, you start with shareholders fund, share capital. Under that equity share capital is 8 lakh. Reserves and surplus under the general reserve is 1,50,000. Profit and loss account, H Limited is 90,000, S Limited is 22,500, 1,12,500. Minus your unrealized profits, which is 2,500, okay, which we calculated, which is 1,10,000. Your non-controlling interest, working note number 4, which is 81,250. And then we move on to non-current liabilities. Under that we have current liabilities, accounts payable. We have sundry creditors. H Limited is 1,20,000, S Limited is 18,000. So total is 22 lakhs. So if you total up your liability side, it is 13,41,250. Moving on to your asset side, non-current asset, fixed assets, tangible asset. Under that we have fixed assets, which is H Limited is 5,50,000, S Limited is 1 lakh. Total is 6,50,000. Intangible asset, which we calculated goodwill, 58,750. Next, current asset, inventories. H Limited is 1,05,000, S Limited is 1,77,000. Total you get 2,82,000. Minus your unrealized profits, 2,500, which is 2,79,500. Other current asset, H Limited is 2,25,000, S Limited is 1,28,000. The total is 3,53,000. So total gets balanced. So from the following balance sheet, you're supposed to prepare your consolidated statement. So we have share capital, shares, general reserve, profit and loss account, 6% debentures, sundry creditors. Under your asset side, we have 6% debentures in S Limited, shares in S Limited 1,500 at 80 rupees each, stock, sundry debtors, cash equivalent, profit and loss account. So additional information, H Limited acquired share as on 1/7/2014. The profit and loss account of S Limited showing a debit balance of 1,50,000 on 1/4/2014. Trade creditors of S Limited include 20,000 for goods supplied by H Limited, on which H Limited made a profit of rupees 2,000. Half of the goods were sold in stock on 31/3/2015. Prepare the consolidated statement. So we start with our working notes. So step number 1, calculation of ratio. So how many shares are there in S Limited? 2 lakhs divided by 100. So 2 lakhs divided by 100, which is 2,000 shares. Out of this 2,000 shares, H Limited purchased 1,500 shares. The minority shareholders will be 1,500 minus 2,000, which is 500 shares. So the ratio is 15:5, which is 3:1. Calculation of capital profits or losses. Profit or loss account, which is a loss on 1/4/2014. So this is the difference in this question. So there's a capital loss in the account. So profit and loss account on 1/4/2014. So if you see, they are telling it's a debit balance of 1,50,000, which is nothing but a loss. So 1,50,000. So less profits for 3 months. So when is the date of acquisition? It was acquired on 1/7/2014. So till 1/4/2014 they have given profit and loss. So directly you will take it to your capital profits, a full amount. And profits for 3 months you will take it from your balance sheet, because it is still 31/3/2015, but it was a till 1/7 we are supposed to consider it for capital profit. So April, May, June. So just 3 months. So profit and loss 80,000, 1,50,000 minus 1 lakh, okay, into 3/12, which is 12,500. So your capital loss is 1,37,500. It is a loss, it is not a profit. So the share of H company is 1,37,500 into 3/4, which is 1,03,125. Share of minority shareholders 1,37,500 into 1/4, 34,375. Calculation of revenue profits. Profits for the next 9 months is considered to be a revenue profits. So 1,50,000 minus 1 lakh into 9/12, 37,500. Revenue profit is 37,500. So the share of H Limited is 37,500 into 3/4, which is 28,125. The share of minority shareholders 37,500 into 1/4, which is 9,375. So calculation of non-controlling interest. Face value of shares held by minority shareholders 500 into 100 rupees per share, 50,000. Add the share of revenue profits 9,375. So share of your capital loss is 59,375. So yeah, sorry, 34,375. So the total is non-controlling interest 59,375 minus 34,375, which you get 25,000. Calculation of goodwill or capital reserve. Cost of 1,500 shares held by H Limited is 1,20,000. Add your H Limited shares of capital loss 1,03,125. less your face value of 1500 shares, which is 1,50,000. So you get a goodwill which is 1,03,000 minus 150, sorry, 2,23,000 minus 150,000. So 2,23,125 minus 1,50,000. Goodwill is 73,125. So the calculation of unrealized profits. In the question, there's a movement of goods. So the goods supplied is 20,000, of which H Limited made a profit of 2,000. Half of the goods were still in the stock. So 2,000 into 1 by 12. 1,000 is your unrealized profits. Moving on to our consolidated balance sheet. So you start with equity shareholders fund, equity share capital, shares of rupees 100 each, 5 lakh. Reserves and surplus, general reserve, we have 1 lakh. Profit and loss account, H Limited is 80,000, S Limited is 28,125. The total is 1,08,125. Unrealized profit, which you minus 1,000, 1,07,125. So your non-controlling interest, working note number 4, will be considered under your liabilities. So 25,000. So your non-current asset, under that we have long-term borrowings, 6% debentures. If you see a question, there is 6% debentures, which is 60,000. So 6% debentures, S Limited is 1 lakh. So 6% debentures, S Limited on 1 lakh, and 6% debentures which is purchased by H Limited is 60,000. So 1 lakh minus 60,000, less your set off. So outside amount is 40,000. Current liabilities, trade creditors, H Limited is 45. Trade creditors 75,000. In that H Limited is 45,000. S Limited is 20,000. Your intercompany owings. So what is your intercompany owings? Intercompany owings is 20,000. So minus your 20,000. So H Limited is 75. S Limited is 45 minus your 20,000. You get 1 lakh. When you total up your balance sheet, you get 8,72,125. Moving on to your asset side, under that we have non-current asset. Under non-current asset, we have fixed asset and tangible asset. Fixed asset, H Limited is 3,50,000, S Limited is 1,50,000, total is 5 lakh. Intangible asset, goodwill is 73,125. Current assets, stock in trade, H Limited is 90,000, S Limited is 40,000. Total is 1,30,000. Minus your unrealized profit of 1,000, you get 1,29,000. So this 1,30,000, cancel it. It is considered to be 1,29,000. So accounts receivable, sundry debtors, H Limited is 60,000, S Limited is 30,000. Intercompany owings is 20,000. So from creditors also we have minus 20. From debtors also we have minus 20. So it is 70,000. Cash and cash equivalent, H Limited is 75,000. S Limited is 25,000. Total is 1 lakh. So you get your balance sheet total to be 8,72,125. So moving on to our next sum. From the following balance sheet of Aarti Limited and Bharati Limited, you're supposed to prepare the consolidated financial statements. So what adjustment they have given in this question is, Aarti Limited acquired the shares in Bharati Limited on 1/10/2014, which is in the mid of the year. The general reserve and profit and loss account of Bharati Limited was showing on 1/4/2014 the balance of 30,000 and 4,000 respectively. So this is before your date of acquisition, so it will come under your capital profits. So the creditors of Bharati Limited include 10,000 of goods supplied by Bharati Limited at a profit of 20% sales. So 10,000 into 20%, which you get 2,000. So 2,000 is half the goods were sold still in stock. So 2,000 into 1 by 2, which is 1,000, is your unrealized profit. So the bills payable accepted by Aarti Limited are all in favor of Bharati Limited. So from bills payable and bills receivable, you will minus that amount respectively as intercompany owings. Prepare a consolidated balance sheet. So you start with calculation of ratio. The number of shares of Bharati Limited is 2 lakh divided by 100, which is 2,000 shares. In the 2,000 shares, Aarti Limited has taken on 1,000 shares, 500 shares. So number of shares held by minority shareholders is 500. So the ratio is 1,500 is to 5, 3 is to 1. So the calculation of capital profits, general reserve on 1/4/2015 is 30,000. So which is from the question. 1 second. The general reserve on 1/4/2015, which is given in your additional information, 30,000, and profit and loss account on 1/4/2014 is 4,000. The general reserve for 6 months we will calculate. Why? Because in the balance sheet they have given for whole year. In that 6 month is capital profit, the rest 6 month is revenue profit. So 40,000 minus 30,000, which is already taken, into 6 by 12, which is 5,000. Profit and loss for 6 months. So for Bharati Limited is 10,000. So 10,000 minus your 4,000 into 6 by 12, which is 3,000. So your capital profit is 42,000. Share of Aarti Limited, 42,000 into 3 by 4, 31,500. Share of minority shareholders, 42,000 into 1 by 4, which is 10,500. Calculation of revenue profits. The general reserve for 6 months is 10,000 into 6 by 12, which is 5,000. Profit and loss account for 6 months is 6,000 into 6 by 12, which is 3 months. So total you get 8,000. In that, share of Aarti Limited is 8,000 into 3 by 4, 6,000. Share of minority shareholders is 8,000 into 1 by 4, which is 2,000. The calculation of non-controlling interest. Face value of shares held by minority shareholders is 50,000. Add your share of capital profit, which is 10,500. Add your share of revenue profit, which is 2,000. So non-controlling interest is 62,500. So the capital reserve or goodwill is cost of shares held by Aarti Limited is 1,80,000, which they have given in the question. Okay, investment in shares 1,80,000 less your face value of shares held by Aarti Limited 1,50,000. Share of capital profits is 31,500. So 1,81,500. Capital reserve is 1,05,000 because it's a 1,500 because it's a negative figure. So calculation of unrealized profits, 5,000 is your goods supplied between the companies. In that, there's 5,000 is your profit into 20 divided by 100. Okay, in that half of such goods were still in stock. 20 divided by 100, which is, so they are telling half of the goods were still in stock. So 10,000 into half, so which is 5,000 into 20% is your profit. 5,000 into 20%, which is 1,000. So moving on to your consolidated balance sheet. The equity shareholders, under that we have equity share capital 5 lakh. Reserves and surplus, we have capital reserve from the working note, which is 1,500. We have general reserve 60,000 of the holding company. Profit and loss account of the holding company is 30,000 of holding company, and Bharati Limited is 6,000. So 36,000 minus your unrealized profit, which is 1,000. So total is 35,000. the outer column total is 35,000. Non-current liabilities, under that we have long-term borrowings 1,000, which is 12% debentures is 1 lakh, less your intercompany owings, which is 44,000, which is 56,000. Which they have given in your asset side, 412% debentures 44,000. So you'll minus that and you'll get 56,000 in the outer column. 1 lakh minus 44, 56,000 will be your long-term borrowings. So 1 lakh, 1,012% debentures 1 lakh, less your intercompany, which is 44,000, which is 56,000. Current liabilities, under that we have accounts payable. So after debentures we have current liabilities, accounts payable, under that we have sundry creditors. Aarti Limited is 80,000, Bharti Limited is 45,000. Total we have 1,25,000 minus your intercompany owings, which is 10,000, you get 1,15,000. Bills payable, Aarti Limited is 12,000, Bharati Limited is 8,000, less your intercompany owings, which is 8,000, you get 12,000. Moving on to your asset side, non-current asset, under that we have fixed assets, under that we have tangible asset. Fixed assets, Aarti Limited 3,42,000, Bharti Limited is 3,20,000. 412% debentures less your intercompany holdings 44,000. If you minus it, you get a nil figure. Then we have current asset. Under that we have inventories. Aarti is 35,000, Bharati is 15,000. Total is 50,000. Minus your unrealized profit 1,000, 49,000. Accounts receivable, sundry debtors. Aarti is 60,000, Bharati is 30,000. Less your intercompany owings 10,000. So if intercompany owings basically affects on your debtors, creditors, bills receivable and bills payable. So bills receivable, Aarti Limited is 10,000, Bharati is 8,000, less your intercompany owings, which is 8,000, which is the total is 10,000. Cash and cash equivalent, Aarti is 11,000, Bharati is 30,000, so total is 41,000. Moving on to our next sum. So consolidated balance sheet with revaluation of assets and liabilities. So the summarized balance sheet of H Limited and M Limited as on 31/3/2015 were as follows. So you have your equity share and liabilities. Under that we have share capital, capital reserve, general reserve, profit and loss account, bank overdraft, bills payable, sundry creditor. Under that we have creditors, H Limited, others. And we have asset side, plant premises, investment in M Limited at cost, inventory, sundry debtors, bills receivable including 1,500 from M Limited, cash and cash equivalent. H Limited acquired 800 equity shares of rupees 100 each in M Limited on July 1st, 2014. So April, May, June, July. So after 4 months after your balance sheet. Prepare a consolidated balance sheet as on March 31st, March 2015, showing your working. Sundry creditors of H Limited include 6,000 due to M Limited. So sundry creditors and sundry debtors will have intercompany owings. The directors are advised that the premises of M Limited are undervalued by 10,000 and its plant overvalued by 5,000. So this is a sum based on your revaluation of assets. So a check for rupees 500 sent to H Limited by M Limited on March 30th, 2015 were not received by the former until April 3, 2015. So we'll start out with the problem. Working notes. Calculation of ratio. The number of shares held in M Limited is 1 lakh, which is for face value of 100 shares. In that, with total shares is 1000 shares. 1 lakh divided by 100. And that shares held by H Limited is 800. So number of shares held by minority shareholders is 200 shares. So the ratio is 800 is to 200, which is 4 is to 1. Calculation of capital profits or losses. So capital reserve, you start with capital reserve because capital reserve is given in the question, which is 60,000. Profits for 3 months, which is so if you see the profit for 3 months is for capital profit. 8,000 is the amount of profit and loss account of the subsidiary company into 3 by 12, which is 4,500. Add increase in the value of the premises. They are telling in the additional information, they are telling the premises are undervalued and its plant is overvalued. So add the increase in the value. Since it is undervalued, add what needs to be the correct value. So you need to increase this from undervalued to the proper value. So you will add it 10,000. So minus decrease in the value of plant. It is showed as overvalued. So in order to reduce it to the correct value, you will minus it. So 5,000. So your capital profit is 69,500. So share of H Limited is 69,500 into 4 by 5, 55,600. Share of minority shareholders is 69,500 into 1 by 5, which is 13,900. So calculation of revenue profits. So profit for 9 months, 18,000 into 9 by 12, which is 13,500. Revenue profits is 13,500. Share of H Limited is 13,500 into 4 by 5, 10,800. Share of minority shareholders 13,500 into 1 by 5, 2,700. Calculation of non-controlling interest, face value of 200 shares. So 200 into 100, 20,000. Add share of capital profits 13,900. So total is 33,900. In this, add share of revenue profits 2,700. So your non-controlling interest is 36,600. Calculation of goodwill or capital reserve. So cost of 800 shares held by H Limited is 1,70,000 less your face value of 800 shares 80,000. H company's share of capital profits 55,600. Total is 1,35,500. Since it's a positive figure, we have 34,400, which is considered to be the goodwill. Now consolidated balance sheet as on 31st March 2015. You start with equity and liability, shareholders fund, another share capital, share of rupees 100 each, 2,50,000. Reserves and surplus, we have general reserve 1,20,000. Profit and loss account, H Limited is 28,600. M Limited is 10,800, which is 39,400. Non-controlling interest is 36,600. Moving on to our non-current liabilities. Under that we have current liabilities, bank overdraft 50,000. Accounts payable, bills payable. M Limited is 4,200. Less your intercompany owings 1,500, which is given in your additional information. Total is 2,700 is your bills payable in your outer column, which is bills payable 2,700. Sundry creditors 23,550 H Limited, M Limited is 4,500. 28,050 less your intercompany owings, which is 6,000 plus 500. So if you see sundry creditors is 6,000 due to M Limited, and a check of rupees 500 sent to H Limited by M Limited on March 20 which was not received by the former. So you will add both, which is your intercompany owings, 6,000 plus 500, 6,500. So 21,550. Moving on to your asset side, non-current asset. Under that we have fixed assets, tangible assets, plant. H limited is 1,20,000. M limited is 54,700 less your overvalued. If it is overvalued, minus it. If it is undervalued, add it from your respective asset. So 5,000, 49,700. Premises, H limited 75,000, M limited 90,000. Add your undervalued 10,000, so 1,75,000. Intangible asset, goodwill 34,400. Current asset, inventories, we have H limited 70,000, M limited 18,000. Total is 88,000. Accounts receivable, sundry creditors, H limited 21,000, M limited 20,000. Total is 41,000 less your intercompany owings 6,500. So amount owing by M limited is 1,000. That check was sent but not a transit. Minus it 500. So 500. Bills receivable H limited 7,900 less your intercompany owings 1,500 less the checks in transit is 500. You will consider that also. Cash and cash equivalent, H limited is 7,250, M limited 4,000. Total is 11,250. So your balance sheet tallies. Thank you everyone.